So it's all coming true. The one thing that had not come true by the end of the last year was wars. That was the last item on the list. And here now we have the war. We cannot change these things.
But you can change.
All we can do is we can protect ourselves,
correct,
our family, and in this case, for you, your listeners, and for me, our subscribers. So right. That's the most important thing. When I was in my 20s, I thought I could change the world. Well, after a while, I gave up on that idea.
40 years ago, did you ever think we'd get this strange?
No, at that time, no, I never would have expected. There was a lot of gloom and doom at that time in 1980.
Right.
And Jimmy Carter, et cetera, well, you can say what you want to about who's president. But anyway, it was a gloomy time. But this bad, you couldn't, if you would have written a novel even a few years ago, people would have said, that could never happen. And here it's happening.
Yeah, it's happening. I can't believe it's this strange.
Yeah.
Anyway, again, this is May 2022. In your last letter, you were talking about inflation and all this stuff, interest rates and all this. So in a nutshell, this is a 25-minute program. What do you see coming in the future?
Well, basically, everything that we were forecasting about a year ago is coming true. And that is always the greatest thing when you make forecasts and then you see them coming true and you say, okay, so our analysis was correct. Now, if they don't come true, then you say, okay, back to the drawing boards. What did we get wrong? Okay, and that's the way to approach life. Nothing is static in this world. It's dynamic. The whole universe is dynamic. And so you have to say, okay, I'm on the wrong track or I'm on the right track. So when you get confirmation that you're on the right track, then you say, ooh, so the other thing may also be coming true. Like 2 years ago, we said, according to the long-term cycles, we should now go back to the 1930s, which was 1 decade of total catastrophe. Terrible policies in Washington. We had dust storms, we had droughts, we had famines, we had wars. And I named those 2 years ago, was in March, I believe, of 2020, that these things were going to happen. The drought has come true. Now they say this is the worst drought in the Western United States in 1,200 years. You can see Lake Powell. The water level is 150 feet down from normal. You see the locust invasions in Africa all over, eating up everything that's green. So it's all coming true. The one thing that had not come true by the end of the last year was wars. That was the last item on the list. And here now we have the war. So the cycles do repeat. This is a long-term cycle. Right. It's going to last 10 years.
So let me say that again, please. If there's only one newsletter, I'd recommend the Wellington letter. I make no money from this. I do it because I respect this man.
You see all these people I was watching this morning, and finally we get the bulls converting to more concerned investors. They're starting to confess everything they got wrong and so on. Well, it's much better not to get it wrong in the first place. In late November last year, so 2021, we wrote, this is the start of the bear market. And all the signals, we showed the charts to confirm it. We said, we've seen 10 months in 2021, 10 months of a distribution period where the market basically went nowhere. People don't realize this, but the markets went nowhere in 2021, and people thought it was a rip-roaring bull market because of all this garbage, the cryptocurrencies and the SPACs and all of this stuff, and they hyped that stuff on TV. I said, the mute button on your remote control is there for a reason. At the beginning of bear markets, you have to hit that. And just look at the picture. Once in a while, you see somebody smart coming on. And, when you're in a business like I am, I know who I want to listen to. And there are very few. And then I turn the sound on, So that's the way I approach the markets. But right now, it was evident 2 years ago. I said, we're going to repeat the period of 1978 to 1981. And that is skyrocketing inflation. In 1978, we predicted a 20% prime rate. And that was I was in a seminar with the chief economist of Goldman Sachs who came over here. And he, in the question and answer, I said, he was predicting 12.75 high in the prime rate. And I said, what do you think about 20%? That is our forecast. And he said, that is absurd. Our economic system could not stand that. And I said, yes, it could if inflation is high enough. And that's exactly what happened. We got a 20% prime rate in 1980, in March 1980. Then Paul Volcker took the foot off the brake. Interest rates dropped, the prime rate dropped down to 12.75% by June of that year. And then I noticed in the unseasonably adjusted money supply numbers that they were stepping on the accelerator again. I said, by December of this year, we're going to hit a new high in the prime rate. In other words, above 20%. And on December 10th of 1980, we had 21.5%. So our forecasts were right on the button, in all the interest rates. The Wall Street Journal had the top 10 economists and their projections of interest rates. And so we put ours below that, which did not make the Wall Street Journal. Right. And it was right on. We were right on in each one of the interest rates, T-bonds, prime rate, Fed funds rate, everything.
Right. And that's why, I was, you and I were living in Hawaii at that time, and you were famous and infamous. People talked about what you said. And they said, Dorman's crazy. Why is he saying this and all that stuff? And I was just starting out, I just turned 30, I think. I had no money. And I said, what does this mean to me? When you're trying to put a real estate deal together, 20% interest, it's kind of hard to make it cash flow. Do you know what I mean? It was really tough times, but there were good times. The other thing I want to say is that when I meet so-called financial experts today, most of them don't even remember 2008.
Exactly.
They're so young. All they know is a bull market.
Yeah.
All they know is that interest rates kept dropping, bond rates kept dropping, the price of stocks went up, real estate went up, everything was going up. We call it the everything bubble. And that's why I highly recommend this. There's only one newsletter, is the Wellington Report, because at least you'll have an idea of what's going on underneath the blankets. And so be careful of the age of the person you take advice from too.
Oh, that is such an important point. I wrote in the last issue of the Wellington Letter, 3 things you want to look for in your advisor. And if he doesn't have all 3, find somebody else that does. The first thing is the experience. I said, at least 44 years of experience in the markets. That gets you back to 1978. Right. You have to remember 1978 to 1981, because that is going to be replicated. I said, we're going to see the same thing. In 1978, we said, Treasury bond prices will decline by 40 to 50%. Again, that was called absurd. And it happened. They went down 44%. At this time around, I said, the inflation is going to exceed the level that we had in 1980. Okay, 1980 inflation was just hit. There was a 40-year high in inflation we have now. And we said the next target for inflation is going to be a new all-time high inflation, which would exceed the inflation level of 1917, which was 19.75%. So we're going to hit a new high in inflation. That means a new high in interest rates. That means a total disaster for bond prices. Bond prices are going to go down 70%.
I'm going to look confused here. So are you saying that we're in 2022 right now? Are you calling for inflation to go higher?
Yes.
And then how does that destroy bonds?
Because when interest rates rise, the bond prices decline proportionally.
Right. So, a bond is this. Let's say if a bond that's paying 10% is worth so much money. But if the interest rates, if inflation goes to 20%, the value of the bond drops. And what most people do not realize, the bond market is 1,000,000 times bigger than the stock market.
Exactly. It's much bigger.
And so that's why I listen to Bert all the time, because, those is beyond my little meager brain. The point here is back when Bert and I were just starting out, there were exciting times. Are you saying it's going to get more exciting in 2022 and 23?
Yes, we have a special report, in fact, Bob, that we're offering people for free, because this is imperative that people know about this, that they don't believe all this stuff that you see and hear in the media.
Right.
The big thing now is inflation. And that basically kills the bond market. Do you have any idea how much T-bonds are down already? This is a number that you don't even hear on TV. The T-bonds are down 36% from last year's high. 36%. This is a disaster, because all the institutions, pension funds, they're loaded up to the gills in treasury bonds.
I understand. And that's what I'm saying is, how old was the advisor?
Yeah.
You know what I mean? Most advisors today, all they
were
know
probably
is
little babies in 1978.
Right. But this is the other part about it is, so many of these idiots out there, there's no cure for stupidity, as you know, Bert. We've seen a lot of it over our times. But I have the 60-40 mix. What is that? Means they have 40% this and 60% bonds, and they're operating by these formulas that worked right after 2008. This ain't 2008.
Exactly. The world changes and they pretend it is static. I mean, how can you have a constant ratio of 60-40? That's absolutely ridiculous. You want to have a methodology that gets you out during a bear market. So if you don't see all of the signals that we see, doing this 12 hours a day, then at least you should have a simple, like a moving average. And so if it breaks through this, we're out.
Got it. But the point here, ladies and gentlemen, this bond market is the biggest in the world. It is the thing that keeps this whole place floating. So simply done, great pictures and all this. But some of your recommendations I cannot do. I mean, they're pretty sophisticated stuff you're putting out there. Simply said. But I think it's good for people to read the Wellington letter to find out what skills you might need. And the reason we have like Andy Tanner as a Rich Dad advisor and John McGregor, McGregor's from Hawaii, father was head of FSB, First Hawaiian Bank anyway. But they're all saying you better take care of yourself. Don't just sit there, buy, hold, and pray. I mean, isn't that what you're basically saying? Don't sit there and just listen to the old song and dance and buy, hold, pray.
Exactly. Forget buy and hold. That is the road to financial ruin.
Right.
You see all these people I was watching this morning, and finally we get the bulls converting to